please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
A very good morning. Welcome to Chartbusters, where we'll highlight all the buzzing stocks of the day. We'll also get you some expert advice on how you trade the Nifty today. Well, this morning, Mangalam and Mimi are bringing you news that, in fact, the Nifty is trading in the red. Well, Mangalam, it's been a while since we saw the Nifty trading with a bit of a cut. Couple of observations. One is that the bond yield, that's moved back towards its 7.45% odd. Remember, in the last 1 week or so, we saw a bit of a rally on NBFCs, on PSU banking stocks as well. Why was that? NBFCs, the cost of borrowing was likely to dip because the yields had moved to around 7.15 odd. And in terms of the PSU banking stocks, well, they were running along because there would be gains in terms of treasury gains. Now, that's all reversed because, in fact, we have seen that the yields have moved towards 7.45%, though it's come off the high point of the day as well. So just keep that in mind. And the other factor, Mangalam, is the breadth of the market. We have close to around 2 stocks that are declining, but just 1 stock that's advancing. And the crisscross lines, well, they kissed each other a couple of times. Now they want to stay away. Let's see whether or not towards the end of the day, they start coming closer to each other. Towards the weekend, I'll bet that they'll come closer. What do you think?
I wouldn't hazard a guess on that one. But tell you what, Nigel, you know, the key reason why we were seeing that up move was with regards to Bank Nifty. It's moved almost, 1,000 to 1,200 points over the last 5 sessions. And now it's given up about 200 points from there. You spoke about the bond yields. Very interesting out there, given I was going through the RBI policy document, and they said that they expect the crude prices to be at around $68.
Yes.
And right now, just a week, not even a week, the crude prices have touched that $70, $71 per mark. And to contain that inflation, perhaps now we're getting news that the oil marketing companies will have to bear the increase in crude prices. So with the oil prices going higher, perhaps maybe there is an upside risk to the inflation. RBI had cut that down. And that is something that is impacting the bond yields as well. Maybe, you know, the street is not taking RBI's commentary right now, apart from the rise that we saw from 7.6 to 7.25. Now the street believes that maybe that was just to temper, and now crude prices and the other chickens have come to roost.
Just keep an eye out on the OMCs, Mangalam. Someone's got to take the hit of this crude price increase. It's going to be very, very interesting from here. But just today's statements that came on the wires, in fact, that's telling us that we are in an election year. So keep an eye out on moves of this sort. And today, the OMCs, they are bearing the brunt.
They are bearing the brunt. The good part is, if you pull up the contribution chart, all the OMCs, all the 3 of them, HPCL, IOC and BPCL, they are a part of the Nifty, but they do not have so much weight on the Nifty. Yes. Collectively, they account for what, 2.5% weight on the Nifty. So they aren't able to drag the Nifty much lower. But if you take a look at the kind of moves that we're seeing on these stocks, well, we are in the election year. But we'll talk about all of this. First up, all the top stories that we're tracking at this point in time. Oil marketing companies, they take a knock. Reports suggest the government has asked oil companies to absorb the price hike of 1 rupee per litre. Narendra Taneja says on CNBC TV18 the discussions have been going on between the government and OMCs, but insists that there is no discussion on the excise, at least today.
All right, then, and PSU banking stocks, they are under pressure as the bond yields spike from the recent lows.
Hindalco, Vedanta and Nalco trade in the green in an otherwise weak market as Norsk Hydro Alumina refinery partial shutdown keeps prices elevated, while LME aluminum prices up 11% in the past 3 sessions as US sanctions on Rusal impact 6% of global aluminum supply.
And Federal mogul Goetz is up close to around 10% as Carl Icahn Enterprises sells Federal mogul to Tenneco for more than $5 billion. Now, the Indian listed company, that's Federal mogul Goetz, that's buzzing in today's trading session, as a change in ownership in its parent will trigger a mandatory open offer in the time to come. Well, weakness after a few trading sessions is what we are seeing on the Nifty. The breadth of the market isn't very great. So let's get a quick check and a technical check on how do you trade the Nifty from here. Should this dip be bought into, or are we bracing for a rather difficult day for the bulls? Ashwini Gujral joins us. Hi Ashwini, good morning. Well, red on the screen. Will it last? Should it be bought into?
It feels like crude has gone to 120. Up $1 for God's sakes.
Right.
And RBI probably meant 68 over a period of time, not a day-to-day price. See, there were excesses last week, inflation forecast, etc. And those excesses are getting taken out.
Right.
Had this been all that serious, the Nifty wouldn't have been down 28 points. So given that we are in a 10,350, 450 type of range, and that's how you should take it. Knee-jerk reaction, banks are coming off just because they had rallied quite a lot. I think 24,800 and thereabouts should be a good support. Similarly, Nifty 10,350 should work as a support, and chances are we will again finally get back above 10,450. So I think the big trade of the day, Bank Nifty shorting at the highs and covering at the low, that is probably now done. Chances are we could remain range bound for the rest of the day. Now, having said that, PSU banks could face a bit more heat. So PNB is a sell with a stop of 105, target of 97. HPCL is a sell with a stop of 346, target of 330. And Vedanta is a buy with a stop of 288, target of 302. I think oil marketing is kind of discounting that this is not the end of their problem. It's an election year, and as crude goes up, they will have to do a lot of absorbing. So I think somewhere that sort of large move is trying to price that, and it's not just about $1.
All right, Ashwini, in that case, a lid on petrol prices, does that mean better news coming in for the auto stocks? Because M&M, that one's at the high point of the day. Election year, of course. Eicher Motors, that one's been a strong stock all through this month, about 7% there too. Would there be a bet there?
How many of us are selling our cars because crude prices have gone up?
Right.
This is life. I think that's what's happening. That at lower levels, Eicher, Mahindra and Mahindra, Maruti, etc., they'll all recover. Maybe PSU banks, etc., will sulk for a day or two, and then people will move on. I think chances are this is more geopolitics. Once Syria is out of the way, I think crude prices could even fall back a couple of dollars.
Okay, all right, Ashwini, thanks so much for joining in and giving us that quick view. Well, in terms of Nifty gainers, you have Mahindra and Mahindra as well as Eicher Motors. Both those two stocks have moved higher, so just keep an eye out on that front as well. Well, I think it's the crude oil prices that are surging. So let's get in. Manisha Gupta, she's the one that alerted us early this morning itself. The Brent crude prices were spiking up. Manisha, what's going on?
Well, thank you for that, Nigel. We have seen $71.34 per barrel in case of the Brent crude oil prices, which has been the highest level since 2014. From those kind of levels, of course, we've seen some prices decline. But the major reason that you saw 3% gains in crude was after Eurocontrol put out an observation that it could be between 72 hours that you could see some air or ground strike on Syria. That really has been the major concern, and that is what took the crude oil prices higher. But then apart from that, it also has to do with the easing concerns between US and China, trade tensions, the weakness in the US dollar, the US sanctions expected on Iran. So there are various factors which actually has been a perfect recipe for the crude oil prices coming back at around $70 to $71 per barrel. But as you guys were discussing, it really doesn't seem that we are going to see a run-up in prices from here on. We are at the kind of levels where we already have made a 2018 highs. So I think it's going to be contained between the 65, 74 at max on the higher side for this season. It also is the summer driving demand that would come in the next couple of months. After that, you will have the hurricane season kicking in as well. So yes, there are some concerns apart from geopolitical and financial as well. There is that seasonal demand. There is that weather concern also coming into the market, and that would keep the crude oil prices supported. But even then, with the kind of US supplies that we are estimating at about 11.4 million barrels per day before this year, and that would clearly surpass Saudi Arabia and Russia as well. So with that kind of supplies coming in for the global markets, I think we aren't really looking at very, very huge run-up into the prices. But yes, I think mid-60s, mid-70s is the kind of life that you will have to learn to live with.
All right, mid-60s, mid-70s is the life you'll have to learn to live with on the crude. We also spoke with David Lennox, the analyst at Fat Profits, and he says there will be a definite increase in the oil prices moving forward. Hear him out.
We certainly think as we move towards the latter part of the northern summer that we will start to see the oil prices move higher. We will keep our Brent price at between $74 to $84 at the end of this year, and the WTI price at between $70 and $80. So you can see we're already expecting to see those prices increase.
All right, and as a result of all this in the crude prices, it's the oil marketing companies. They've cracked in trade today. Reports suggest the government has asked oil companies to absorb the 1 rupee price hike of 1 rupee per litre on fuel. Let's get in Sonal Butra to know what brokerages are saying. Sonal, there's no confirmed report yet, but in case that does happen, what are the brokerages saying?
Well, I think Jefferies was already fearing that. Last week, we were talking about how petrol and diesel prices were at record highs, and that's when Jefferies came with the report, and they said that there is a possibility that they might be asked to absorb these price hikes, and they said that already the FY19 provisions for fuel subsidy were at the lower levels, and they won't be adequate. So if there are any unmet under recoveries for FY19, they will be asked to share it between the upstream companies and the downstream companies. So if they're shared in the ratio of 50s to 50, and assuming that for every 10,000 crore of unmet under recovery is shared 50-50 between the upstream and the downstream companies, it would lead to a decline in their FY19 EPS. So they estimated that for ONGC and Oil India, it would cut their FY19 EPS by 7 to 10%. For IOCL and BPCL, it would cut the EPS by 9 to 10%. But for HPCL, they expected a higher cut, that is by 13% for HPCL, because the share would be higher. So that's why I see that those stocks are declining in trade today, and HPCL, that is seeing the biggest cut today in trade. And we also spoke to Narendra Taneja. Let's listen into what he had to say about this.
The petrol, diesel are decontrolled commodities, as you know, so the government can't really issue any instructions as such. But government being the biggest stakeholder in these companies, they can always have conversation on these lines so that the trust of the consumer, you know, who is the most important person, is maintained. We see prices moving only in one direction, that's up and up. So I think it's to win the confidence of the consumer at this stage without really, you know, upsetting any kind of the order which is in place. The government has asked the companies very clearly that they should, do their best in order to pass on the maximum possible benefit to the consumers. I don't expect the prices to go up to that level simply because demand and supply fundamentals are perfect. At the moment, there is no proposal. It has been discussed with the Ministry of Finance, but the Petroleum Ministry has said, but the Petroleum Finance Ministry is in no mood at the moment to have even any discussion on excise. But the companies have been asked to do their level best so that they can pass on the maximum benefit to the consumer.
Well, we also spoke to Finance Secretary Harsh Mugadia last week on the excise duty decision. Let's take a look.
Ms. Adhya, you know, a few months ago, right after the budget, it was the same setting, and I asked you, sir, if crude oil prices continue to move higher, will you have the ability to bring down excise duties? Today, the BJP President, Mr. Amit Shah, speaking at a rally, has said that we will provide relief on taxes. It's coming soon. Is it coming soon, sir?
Well, I don't think I'm in a position to take this decision myself. So
what have you been told, sir? Have you been told to cut the tax or not?
It's a collective decision which the government will take whenever one has to look at the need for giving relief to people vis-a-vis also the tax revenues. And so if it is a difficult decision also, but if it is required in the interest of people, the government will take that decision. But as of now, there is no firm decision on this. If we take any such decision, we'll let you know.
No, I'm sure you let us know, sir. You'll have no choice but to let us know. But is there a need today, given the fact that we're almost at a 4-year high, this is an election year, what is the directive, the instruction, the informal conversation around the need for an excise cut today?
Well, we can't talk about informal discussions. In government, whenever there is a formal decision taken, then only it becomes the decision, you know. It's not that we are completely oblivious to the need of the people, nor are we neglecting having a look at the situation. We are looking at the situation at a proper time. If the decision has to be taken, we will take it.
Shikha Sharma seeks a shorter tenure as the head of Axis Bank. Abhishek Kothari, her colleague, has made a comparison of the bank's performance in her tenure versus peers like ICICI Bank and HDFC Bank between FY9 and FY18. Abhishek, over to you.
Well, Mangalam, to begin with, how has Axis Bank performed under Shikha's tenure? The deposits have grown by 3.5x while advances have grown by 5.2x. Now, this loan growth has come at a cost, so asset quality has deteriorated significantly, wherein gross NPA has increased by 28 times over the last 9 to 10 years. But her focus has been on the retail sector. So the retail portfolio actually has grown from being at 14% of the total book to now about 47.3% of the book. She has been been a wealth creator for investors, wherein the market cap has increased by 7.2x during the same tenure, while book value has increased by just 4.5x during the same tenure. Let's look at how these numbers stack up against the peers. Now, while deposits have grown at 3.5 for Axis Bank, it has grown very high for SDFC Bank at 4.2x. Loan growth has been the key talking point for Axis Bank, wherein the loan growth has been at 5.2x. The next best being SDFC Bank at close to 5x. Now, the key driver has been the retail portfolio. The retail portfolio, as I mentioned, the share has increased to 47%. The overall retail book has grown at 12x versus peers at 4.5 or about less than 5x. How does the gross NPA stack up? Now, the gross NPA is the talking point, which has increased by 28 times for Axis Bank, while for peers it is less than 5 times. So in percentage wise, the gross NPA for Axis Bank has increased from 0.96 to about 5.3%. Let's look at how the market share has improved or deteriorated for Axis Bank. Well, the overall business market share has improved from 2.6% to about 4.4%. SDFC Bank, on the other hand, the market share has improved from 3.8 to about 7%. But the key point to note in market share increase is the deposits and overall low-cost deposit franchisee. Now, the low-cost deposit, that market share has improved from being at close to 8% of the market share to about 17%. Back to you.
All right, Abhishek, thanks a lot for that interesting data there. But one stock which is surging in an otherwise weak market is Federal Mogul. Surges as Carl Icahn sells Federal Mogul, that's the parent company, to Tenneco. Nigel gives us the details. Nigel, marriage happening in the foreign world and the Indians rejoicing?
Absolutely. You know, Mangalam, if you take a look at it, as you said, well, Carl Icahn has sold the international company. That's Federal Mogul LLC. Remember, that company was delisted from the bourses in the international market. But why are we talking about this? Because that particular company, that's Federal Mogul LLC, has got sold to Tenneco. The deal size is roughly around $5.5 billion, and also Tenneco will assume all the debt. But why are we talking about an international company? That's because since there is a change at the parent level, then in fact it will trigger a mandatory open offer once everything gets cleared between Tenneco and Federal Mogul LLC. Now, it will trigger a mandatory open offer, and that's going to be quite interesting because promoter stake is already at 75%. You have RelCap in there with roughly around 10%, and LIC as well has quite a large stake. Now, importantly, Federal Mogul Goetz, that's the Indian listed company, they're into pistons as well as piston rings. They have close to around 45% market share, but that's set to increase. Why is that? Because BS6 norms are likely to come out in the next couple of years. And this is one of the only companies that has access to international technology as well as integrated manufacturing operations. They're getting it from their parent itself, so the strong parentage is something that works in their favor. Well, there's going to be a mandatory open offer, and the open offer will be, Mangalam, for around 25%, as we know. Promoter holds already 75%. So, any kind of tendering in, if tendered at all, would call for either bringing the stake back down to around 75% or maybe in fact delisting. Is delisting an option? That we don't know. But at current reckoning, delisting would require payout only around 650 crores. This merged entity will be a multi-billion-dollar company. Well, finally, this appears like, in fact, it's a good fit for the company internationally. We'll have to see what kind of benefits can flow to the, to the Indian listed company as well. And in terms of valuations as well, it's very, very important because on an EV upon EBITDA basis, this one trades at roughly around 12 times or around 13 times EV upon EBITDA. We know various other MNCs, global peers, they trade at around, global peers that are listed in India, I'm talking about, they trade at around 20 times EV upon EBITDA, 30 times EV upon EBITDA. So valuation wise as well, if you compare it in those terms, not looking very, very expensive. The key trigger is BS6, the utilization levels going up from here. And interesting times, stock up 10%, massive volumes.
Massive volume. So let's see whether people who bought in, maybe they will tender it or they are taking home some money after the 11% move uptick in today's session. But watch out for HDFC Limited. That big boy is currently putting a bit of a floor on the lower end for our markets. That one is at the high point of the day.
Mangalam, we're getting some important information actually. Emirates has ruled out Air India's bid in response to a CNBC TV18 query. I think that's important, that's flashing with you. Emirates is telling us that in fact they have no plans to buy or acquire any airline. They continue to focus on organic growth as well, and they'll partner with any other airlines where it benefits their customers and makes commercial sense as well. So, you know, we'll keep an eye on that.
I think we'll have to try Ashpreet as well. And with this, what happens is that all the three contenders who were there, we had Indigo denying that they are not looking to buy Air India in its current form. Jet Airways denied that they are not looking to buy Air India in its current form. And now we have Emirates, which have ruled out the Air India bid.
Yeah, absolutely. So we'll get Ashpreet, but for the time being, I don't know, do we have Ashpreet with us? All right, we don't yet have Ashpreet with us. She's going to take us through those details of what Emirates had to tell CNBC TV18. Ashpreet, over to you.
Well, yes, it seems like within 1 week, one airline after the other has been going ahead and saying, no, we will not bid for Air India. Now, the airline which is in the race of not bidding for Air India is Emirates. We had sent a specific query whether they will be bidding after the government has come out with the expression of interest. Remember, the government has said they will be giving up 76% of the stake, but will be retaining about 24%. But Emirates is telling CNBC TV18 that they have absolutely no plans to either acquire or expand in India as far as any airline is concerned. In fact, they've also gone ahead and said, if required, the code-sharing packs and everything will be done in due time. So just to give you a recap, Indigo has opted out. Jet Airways has also said that they will not be looking at bidding at Air India. Consortiums have also been denied, where there were news reports about how Indigo and Qatar Airways might form a consortium and bid, but we'll have to wait and see what will be next. Government might be forced to go ahead and relook at the expression of interest that they've issued in the public domain. Thank you.
All right, Ashpreet, thanks a lot for that.